Another video. I hope you guys are enjoying your Saturday. And today we're going to do a weekly market stock breakdown. Now we're going to speak about all of the reasons why almost everything on the watch list today is going to be a sell. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, I've said this before and I'll say it again. All stocks are going to fall in the market. Now, we can already see on this week, we're just going to quickly just touch base on the fundamental data, but I've covered most of the fundamental data for the dollar index yesterday, which has got a negative correlation with the stock market. And because we're expecting the dollar to increase in value, you expect gold as well as every US stock company to drop in value. And we saw that when the market got spooked by Powell when it started talking about a half a basis point interest rate hike. Apart from that, we also have companies coming out with their quarterly earnings, which is currently struggling to deliver against expectation. Now, this is a earning calendar or a stock earnings for companies listed on the Nasdaq 100 that came out recently. Okay, so these were the report dates from the 20th of April, 9th and 21st. So it's basically the week that it just passed now. I can see everything was sitting in a negative. It was only Tesla that came out with a positive. And you can see here, it just indicates earning rating sell. So the data that's being released for the stock so far in terms of the earnings season is quite negative. And with the Nasdaq 100 being a tech stock company that rides off the back end of consumer spendings, one would have expected things to look better. And then we had the story with Netflix that had lost over 200,000 subscribers, blaming the situation between Russia and Ukraine, and also blaming people for setting passwords. Well, what can I say? I guess I won't have a Netflix subscription soon because I'm setting someone else's password. Well, if that needs to go, then that needs to go, I guess. But in any case, let's dive straight into it. So we know the stock market is overall bearish, but one thing to keep in mind is that we are expecting more earning reports coming out this week. So we have to be reactive and not predictive. This is a massive sell. The market has got the potential of falling for as long as it can, just as it got this high. Okay, just as it moved this high, it can go back down again. Like, there's no question to whether or not it's going to go back again. But it's important that we make sure that we get into the best prices when it comes to buying or selling. So we're going to start with the famous Nasdaq 100. Now, if you start here on the monthly time frame, what do we see? Now, firstly, we can see the market is currently trading below very important structure. This level over here acted as a strong level of resistance. The market broke above that, came to test it as support, and you can see how support's currently not holding. But this is a monthly candle, so this candle can do the same that this candle has done here and just spike to the upside. Now, it's best to keep in mind that we are on the 23rd of April, so we do have a couple of days left still. It would be good to see this candle close below this level, because that would definitely confirm that sell to the downside that we can take up until there. But for now, we're going to look for short-term opportunity in the market. Now, there is a good opportunity for the market to continue lower. Now, if you've been on the channel for quite some time, you would probably have noticed when the market was trading at this level, I explained all of the reasons for why we can expect the market to go and fill in that wick there as well. Now we can see that is exactly what the market is about to do. Now, if you drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we spoke about this yesterday, where the market printed an equal high, and we saw that massive rejection. Also, market was testing previous support, broke below that, came to test it as a resistance multiple times. We saw the market melt to the downside. Now, I also said that there is a high possibility that the Nasdaq could be stuck within a consolidation for a period of time. And a lot of people asked me, do you really think that's going to happen? And I said, yes, there is a high possibility that we could see the market start moving sideways as well, up until we get the data that's going to be released from on the 4th of May, which is the US interest rate hike that is expected to be increased at a half a basis point. That's going to send the market even further flat. Now, on the daily time frame, what do we see? Now, here on the daily time frame, we have this clear impulse. After an impulse, you expect a correction. Now, the best way to measure that correction is by taking your Fibonacci from the high to the low of this impulse. And you can see we've got a 50% pullback lining up perfectly with that structure over there. Now, there's definitely a possibility for the market to pull back to this level from where it is now before continuing lower. But we can also expect the market to first continue lower and then potentially pull back and continue that weekly just to continue that weekly consolidation phase. If the market does pull back from this level, then we can definitely expect the market to continue lower, and that's why it's important as traders we have to be reactive and not predictive, and we have to learn to adapt to the ever-changing market environment as well. So if we do get this pullback before the market go and hit that daily support, we can definitely expect that retest, that continuation to the downside, and then a potential pullback for the market to complete the weekly range there as well. Next up, we've got the Dow Jones on the monthly time frame. What do we see? This has also been one market that has been giving us some mixed signals. Now, the Dow Jones, if I just look at the price action, the market, as you can see over here, we are currently testing strong support, but that doesn't mean anything. There's a high possibility for the market to fall all the way down to come and test this level over here, which is a monthly fill of this week here as well. If you look down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see based off last week's close, the market had just give me a second. So if we bring out our line chart here to see exactly where these wicks were, there we go. So we can see how the market had definitely closed below this strong level of support, and all of that support is now acting as a level of resistance there as well. Again, we can expect this market to pull back lower. There's just a slight contradiction that we can see here. Let me see. No, there's no contradiction here. This is definitely going down. Sorry, I was reading the price action wrong. So there's definitely a part, there's definitely opportunity for the market to go lower here as well. If you up down on the daily time frame, what do we see? Now, from a daily perspective, the market was slightly consolidating here for a couple of days. You can see how the market was moving sideways, had that fake liquidity grab there at the bottom, making retail traders think that I was ready to sell. The market broke below that, and we can definitely expect that pullback before that continuation there as well. In doing so, the market will complete this impulse correction and impulse pattern. Now, there is a high possibility here for the market to pull back, but we can definitely expect the market to pull slightly lower first. I'd probably expect this market to come here, there at least first, and then pull back and then continue to the downside there as well. There we go. Let me just remove that. Wonderful. Next up, we've got the SNP500. Yeah, I did this analysis I think last week Sunday, but nothing is going to change. I'm just going to remove that here, and then yeah, this analysis is probably going to stay the same. So we have this massive impulse, we expect that correction. So if you look at one stock, you'll see there's some correlation between the pairs, because they're all US stock markets there as well. So we're going to trade this the same way as the Nasdaq as well as the US30 there also. Next up, let's look at some Euro stocks. So we've got the German index here as well. This was also done last week Sunday. So we got the same kind of price action over here, monthly time frame. We have this market stuck within a level of support that got broken, that is now resistance. So we got resistance that got broken, that is now acting as support. So we don't know if this market wants to go up or down, but based off the price action that we receive here, we can definitely expect this market to continue lower, because we can see based off last week's close, the market printed support, got broken, came to test it as resistance. So we can see how the market tested and rejected that level quite aggressively. Now, here on the daily time frame, what do we see? Now, from a daily perspective, we can see the market is currently testing strong daily support. Now, it's very important that we are reactive and not predictive. So there's two ways that this can play out. The first way is if we can get a clear break below this level and then on the retest we can start looking for selling opportunities. There's also a possibility for the market to pull back higher before continuing lower as well. Now the best two places to get into this market would be at this level over here, because you would be selling the market at a previous level of resistance, or if you sell the market here at that level, that means all of the support would then be broken and then return the resistance, so you'd be selling the market at a good price there as well. But selling the market the based of where it is now is probably the worst thing that you can do for yourself. Next up, we do have Usoil. Now Usoil, this price action is very straightforward over here. We have this impulse correction and we expect that next impulse. So if you take your Fibonacci on this correction over here, you can see how we've got a -27 that's lining up perfectly with that structure over there, and the market has just also completed this W formation to the, well, not to the neckline as yet, but I would say the best way to approach the situation on the Usoil would probably be for the market to break above that level, and then on the retest you can start looking for that buying opportunities to the upside there as well. Alternatively, because we have this potential W formation, there is a high possibility that the market first can continue lower to go and test that neckline of the W formation before continuing higher as well. Next up, we do have we've got gold. Now there is no question to whether or not the price of gold is going to drop. It's going to drop whether you agree with that or not. So if we start here on the monthly time frame, we can obviously see gold is still trading above the strong level of resistance, broke above that, and it's testing it as support. Now the most recent structures that gold created was this levels over here. Alternatively, we could see gold come in slightly deeper. So if you take the Fibonacci from the low to that high over there, we could see the market potentially come and test the the 78.6 of the Fibonacci taken on this monthly impulse. Now I've dropped down on the weekly time frame. This market is stuck in a consolidation phase. We can see that was the level of resistance that the market printed, and this level over here acted as resistance, broke above that, and it became support. So at the moment you can see the market is just moving sideways here as well. Now you obviously guessed it by now, but a sideways market needs to create a clean breakout first. Now sorry about that. So this is the level of resistance that the market had broken, right? Resistance got broken and became support. The best way to approach this would be to wait for the market to break below that. Then on the retest you can start looking for selling opportunities for the market to go and test that 78.6 of the Fibonacci taken on the monthly impulse. Now it is also very important that you keep in mind that this market could potentially just continue to consolidate up until we get up until we get the interest rate decision from the US, and then start seeing that final breakout or that final meltdown to the downside, because investors are obviously still not 100% sure to whether or not the Fed is going to give us an alpha basis point hike. Although based off the CPI numbers, which is at 8.5, it is highly expected for the market to go and do that. Now I've spoken about gold so many times, and if you've watched the videos before, I have said we can expect that market to continue higher, test that level there, pull back, but I was expecting a pullback to this level over here. Unfortunately, Powell came out and he's like interest rates, and then people were like, okay, let's get our money out. But this is where we are now. Now remember, we can also expect the market to pull back, then go up, and then come back, and then go up, and then potentially foresee that break to the downside take place. And that's why I always say that it is very important that you become reactive and not be in a rush to take the trade. Wait for the daily to close first. So if you want to get into this market, wait for a daily candle to close below this level. That's going to give you a confirmation. Alternatively, if you can get in at this level, then you will have no problems holding this trade for as long as the dollar increase in strength. Now I want to say thank you so much to all of you for your time. I hope you have a good weekend, and as always, cheers for years.